Trevelyan Next is a division of Trevelyan, a financial services specialist search and talent advisory firm. Since inception, the Trevelyan team has dedicated itself to enhancing the return on investment of a company's most important resource, its people.
Hi, everyone. I'm Brian Love, head of banking and fintech recruitment at Trevelyan. Trevelyan is a boutique executive recruitment firm focused on financial services, and my division specializes in succession planning and executive search. And we are super passionate in helping financial institutions locate the unique skill sets that they need to be more sustainable and innovative. For more information, please visit trevelyangroup.com. Today, I'm joined by a very innovative guest, Mr. Tom Bell, CEO of Maast. Tom, welcome.
Thank you. Glad to be here.
Yeah, and it's great having you on. And I really wanted to kind of dive in first and foremost. It's right behind you, that word Maast. What is Maast? And who are you?
Fair enough. Well, we'll start with who is Maast. Maast is a wholly owned subsidiary startup of Synovus Bank. And what it stands for is Money as a Service Plus, which is a broad capture of thought, if you think about it, we're money as a service. And the focus that we have is enabling software platforms to truly embed financial services into their platform. So that's what we're focused on. I've been here at Synovus for about a year and a half. Prior to that, Bank of America Merchant Services, Merchant E, Accenture, and lots of other places. So, this is kind of a culmination of a lot of different things, working with the bank to create what is a very innovative and, I would say, corporate shaping, strategy shaping startup for Synovus.
And Synovus is no stranger to this type of thing. I know there's the heritage of TSYS is probably felt even today.
It is. It is.
So tell me a little bit about that heritage.
It's interesting. Synovus is over 130 years old. Started out of Columbus, Georgia, and as early as the 70s, Columbus Bank and Trust, before it was rebranded Synovus, decided to build their own IBM mainframe card processing system, which seems crazy, but they did it, and they did it obviously very successfully, because then they realized that other banks might want to use this platform on an outsourced basis, and they formed TSYS, and the rest is history, if you will, in terms of how that evolved. And Synovus has been very much involved in the evolution of TSYS throughout the process, including up to the point of the acquisition by Global Payments. So innovation, technology, providing solutions to the industry is very much part of Synovus's DNA. Sounds
that way. Yeah, 130 years old is an amazing lifeline for or life cycle for a bank. So you mentioned embedding payments within your customer, and that's something that is somewhat of a hot topic, even at banks much smaller than Synovus. A lot of the banks, even sub 10 billion, we deal with at Trevelyan. So you hear about embedded finance, you hear about embedded fintech, you hear about banking as a service. Right. I'd love to hear from you, Tom, the delineation between the three and the similarity between the three, because there's a lot of information out there.
Yeah, it's great, and you're right. There's a lot of maybe even confusion about what they are. Yep. At a core, banking as a service gets a lot of buzz, and there's a number of large and small financial institutions that are working on various different banking as a service solutions. In my mind, banking as a service is basically leveraging the bank's charter, the bank's regulatory frameworks, et cetera, to enable a third party, a fintech, to bring financial services to market. Not unlike, frankly, in the payments space, where banks are a sponsor of ISOs. It's a very similar model with a very different, flavor, but it's a similar model. So banking as a service, and there's, especially in the small and community bank space and in regional bank space, there's a number of people that are finding success in that space. But it's really the fintech that's bringing the solution to the ultimate market. Then there's the embedded fintech concept, which is almost really the inverse, where a bank is, rather than potentially expanding their own capabilities, or they're embedding a fintech solution into their platform.
Sure.
And there's a number of things out there where they're basically saying, I could go build this and go after this market, go after this, this distribution channel, whatever, or I could just embed a fintech solution into my platform, into my core banking solution, and let that be a way I go to market. We look at embedded finance as probably the next generation of all of that, where we're saying that embedded finance is truly taking the financial services products and embedding it into a software platform, a software as a service platform, et cetera, so that that partner is selling the product of the bank, a truly integrated distribution partner. So what we like to say is different about what we're doing at Maast is that we're bringing the whole product, right? We're not bringing an integration layer or just an integration layer. We're not bringing, the bag of parts, sometimes as I like to say. We're bringing the whole product and the capability for a software provider to make it part of their solution, part of their value proposition, part of their brand. And then we take responsibility for the banking that's required, if you will, the regulatory part, the compliance part, the risk part. And so that the software provider can really focus on what they do, which is building elegant software to serve a business problem, typically in a vertical space, whether it's in field services or catering or pick your industry. They've created a software that's solving a business problem. And what we're enabling them to do is to now widen the lens of how they can help their end customers. So today, a software provider will be using their solution, to help a company with ordering or scheduling or invoicing or all the different things operationally they have to do to make their business run. And we're saying basically, let's just extend that. Let's just extend that to include financial services that you, software provider, get to bring to market. Another way to think about it is almost analogous to what's happening with embedded payments. There's a lot of times when people talk about embedded finance, they're really talking about embedded payments. And embedded payments in software platforms is becoming table stakes, right? If you have a piece of software that you're trying to convince a small business to use and they can't accept payments through that platform, you're probably not going to acquire that many customers. So we're basically saying, take, software provider, take that exact concept, and then it's just extended horizontally to include checking, lending, payroll, accounting, insurance, all the different things that we have in our product roadmap, so that, if you will, that software provider, and I'm somewhat reluctant to use this term, but I think it is appropriate, kind of becomes the super app for that small business. So no longer are they having to use that platform to operationally run their business and then go to some completely different platform to solve their financial services needs. It's truly integrated together. The other thing that we've done as part of our build is that we've also integrated the underwriting, which, in my world, when you say underwriting, usually that means friction. And what we're saying basically is when you get underwritten for the payments account, you're immediately underwritten for the checking account, and you're immediately underwritten for the loan. And we'll use that same underwriting information as we go along and expand the product set. So an ISV, a software platform, can have the confidence is that once they partner with Maast, that adding new product and then selling that product to their customers is going to be pretty easy. Or we like to say, it's one relationship, one contract, one integration.
That's great, Tom.
Yeah, for the ISV, it's very compelling. For a software platform, it's very compelling because it gives them a whole new product set where they can gain revenue. Because just like I said with payments, software providers are accustomed to participate in, the revenue, right? There's some revenue sharing model that's in place, right?
Yeah.
We're saying that same model is going to exist on deposits. That same model is going to exist on loans. And so they'll be able to potentially increase revenue per customer on their platform 2 to 5 times of what they're able to do, with their current product set, which especially in these days with potentially a downturn in the economy and other things that maybe other headwinds that we're facing, that's a real compelling, message for a software provider if they can start to generate more revenue per customer, while they're in this downturn in the economy.
Yeah, and I'm thinking as you're talking, Tom, and it's a amazing product, for lack of a better term, but you guys have scale at Synovus. You're over 50 billion in assets. Embedded finance is not a niche strategy that every bank can do. It sounds like you're definitely you have the ability to do this, which is a game changer. Most banks probably have to fall back on embedded fintech, but why does it work for a bank like Synovus?
Well, it's interesting. We've approached this very much as a startup organization. So we've formed this wholly owned subsidiary within the bank. The people including myself, I'm not a banker, and many of the people that I've brought in on the management team are not bankers. But what we've also done is that we've leveraged platform providers and new technology, et cetera, outside of the bank. So we're not standing this up on the core Synovus, bank platform. We've actually stood up our own digital bank. Well, that will be the system of record, if you will, for this solution. And we've leveraged heavily on partners. So basically we've said, we're going to work very closely with partners to get this stood up very fast. Because basically it'll be from the point that we started really in earnest on this to where we are today, and we are live with some pilot customers, it's been 18 months.
Wow.
And so the expenditure that we've been able to really minimize the expenditure and kind of treat, the precious funding that we've gotten from the bank to be able to really get to market fast, because that's been our objective. We want to be able to get it in market, test, learn, evolve, and iterate through this process, because as you said at the very beginning of the discussion, it's evolving, and what is embedded finance and what is valuable and what is not, and what are customers going to really, clamor for versus what's not going to be important. We wanted to get that in market and test it, as opposed to a 3-year build, that takes millions and millions of dollars. Or as always, and we've leveraged a lot of people from our partners, a ton of people from the bank. One of my favorite things to say is that, as I always like to say, is that I don't like strategies that start with first hire 100 people.
Right.
I like strategies with, okay, let's get a scrappy group and let's just figure out how we make it work. Right. And then we'll harden it, and we'll build it. We'll do what we need to do to scale it, once we've proven that it's going to work.
Well, and that's a good point. And I want to, talent is my bailiwick, right? That's what we trade in at Trevilian. And as you're saying that, some of the community banks fall into that trap of, let's hire, instead of thinking like, let's get the idea and hire around that idea. It's like, let's bring the person in who's going to bring the idea rather than us creating the idea. So I wanted to talk to you about staffing. You have you started with kind of a ragtag team, and you even said non-bankers. And so we are seeing a trend of, fintech folks coming into the bank space, innovating. What's important to you? If you were a bank trying to be out there and innovate like you've been at Maast, what would you recommend in terms of hiring?
I think first of all, it's individuals that have experience in creating something new, and that have gotten their nose bloodied maybe in creating something new.
Maybe failed a few times, right?
Yeah, failed a few times, right? And then they've learned from that experience, right? Because there's in all industries and all organizations, there's people that have started at the bottom and worked their way up through the top, but it's been within a structure, a proven structure that enables them to be successful, right? I think when you're doing this type of stuff, you got to find people that are successful without that structure, because the structure doesn't exist. And so that's kind of what I've really focused on, is people that can operate very successfully in that type of unstructured world, and are willing to take some risk and willing to stick their neck out a bit, right? And it's not like it's super risky from a career standpoint, but it is different than in a corporate job with all the structure and things wrapped around you. So that's number one.
Yeah.
I think number two, different disciplines, right? I mean, the people that that we're bringing in are truly experts in their particular space, whether it's going to be product, whether it's going to be risk and compliance, whether it's going to be in operations, and really find a person to put it in the top of that pillar in the beginning, to then really drive what's underneath it. So that's kind of what we've done. We basically have myself and a CMO and a chief risk officer, a head of product, a COO, and we kind of hired them in to then let them build the team.
Yeah.
Right. Because we didn't spend a lot of time trying to define the final iteration, if you will. We said, let's get the pillars set, if you will, and then together we'll figure out what level 2, 3, 4, 5, and 6 really need to look like once we evolve this business model. Because I think that's where sometimes companies believe that they've got to have it engineered, designed, top to bottom, left to right before you start.
Yeah. And
trust me, we did the opposite. We started with the concept and then just started building and adding on and building and adding on. And there's been clearly things that we've done that in retrospect were really bad ideas. And then there's been other things that have just been like bluebirds that flew in the window, and we're just like, holy smokes, that's genius. And that's the nature of it, right?
Well, it sounds like I'm also hearing empowerment.
Yeah.
Right. I mean, because in my experience and with well-run companies, empowerment breeds pride in what you do, and you get the best performance from people that really feel connected to their work. Is that the case too?
Absolutely, and I think it goes beyond that as well. Synovus and the leadership at Synovus, all the way to the top, with Kevin Blair, they have empowered us to go do this, and they've rallied the bank behind us to go do this. And so, I wake up every day, thank you, my lucky stars, because it's never no. It's, okay, how do we help? How much? How fast? And, so we're really empowered. And then we've got the bank behind us to really help push, if you will. And so and I know this is going to sound a little bit, trite, but it's absolutely the truth. From the point we started discussing this strategy to today, not once have I had well, that's not the way we do it here. It's been, okay, I understand what you're trying to accomplish, so let's figure it out.
Yeah, that's, they always say those are the kisses of death when you hear that. And that's actually a good segue to the next, question. We are in an industry that, there's a lot of fear of the regulators, fear of, capital concerns, fear of economic downturns. And I think that stifles innovation a lot of times. But a lot of times the good innovators see opportunity in those situations, right? Mm-hmm. And, right now there are some nebulous things, that we're thinking through for next year, for 2023. What is the economy going to be like? And I wanted to, you have such a great perspective on this industry. You've been part of it for quite some time. And I wanted to almost like put a crystal ball in front of us and maybe throw a couple topics at you about what you think is going to happen in 2023 and beyond.
Yeah.
So just generally, go for it.
Well, I do think that more and more, whether independent of the economy, I do think that you're going to see more and more financial institutions dipping their toe in this space, whether it's banking as a service, embedded fintech, embedded finance, or the next iteration, whatever it is in the future. Because I think they realize, especially at the community and the regional bank level, it's hard to grow. It's hard to grow because, how do traditional banks grow, right? Well, they decide to move into a new market, which means you got to hire more people, and you got to open facilities, and you got to build relationships. That's tried and true, but it's hard. It takes time. It's expensive. Or you can acquire a bank, right? Which is hard, has a lot of execution risk, requires capital.
Yeah.
So, versus, and that's why I think Synovus is uniquely positioned, and I think other regional banks are looking at this as, using if you will, a distribution partner model to distribute product. So in our case, it's software platforms to distribute Synovus product. Ultimately, if you go all the way to the bottom of the stack, it's Synovus product that's being distributed. It's Synovus balance sheet that is being leveraged, right? It's it has a real appeal to it in terms of an efficient growth model. So number one, I think you're going to see more banks, financial institutions working in this.
By the way, Tom, it's about 100 banks in the Baast space right now. I think by next Christmas, I'd be surprised if it's not doubled.
Yeah. And I think it's interesting when you correlate that with what's happening in terms of vertically integrated software. When we started this journey in terms of the initial conversation of strategy, working with BCG, there about 30% of small businesses were using some vertically integrated solution to run their business, whether they're in construction, field services, whatever it was, right? That number 2 years later, it's now 50%. And so the correlation of software really being, the distribution model, and more banks wanting to go there, I think is why you're going to see a really interesting, transition here.
Yeah,
I think you're going to see more and more realizing, more and more are going to realize that it's more than just payments, and there's an opportunity to distribute true financial services. I do think that, as always, the B2C model is going to continue to inform the B2B model. That's the reason why you see, in my opinion, why you see a lot of, B2B, digital banks, being formed, is because that's the way the customer wants to interact with their financial institution.
Sure.
And a lot of that is being informed because that's the way they, as an individual, you're interacting in a very digital way with your financial institution. And then you put your business owner hat on, and you want to have the same experience. So I think you're going to see, the inevitable, demand, but for that to happen. And I made the reference to earlier about the super app, but I think, small businesses, want to simplify their life. They don't want to complicate their life. And so if I can acquire the products and services that I need to run my business in a very low friction, easy to buy, easy to use manner, why wouldn't I do that? Right. And so I think that's going to be, what's going to continue to happen there. As I said earlier, vertical software, there's a long tail to that, I think, in terms of more and more vertical solution. And the funny thing is that even as we're talking to potential partners, as we've sized the market, the addressable market, serviceable market, all those kind of things, it's the goalpost is moving, because you don't know about that guy that's in the garage right now that is an HVAC contractor who figured out that he can build better software to help run his business and then take it to market. And we see a ton of that. We're having conversations with a ton of people that have built software to run their business, and now they're flipping the script and they're going to take that product to market. And so we don't even see that, in terms of what the real addressable market is. So I think those are the things that we're banking on, frankly, because we believe that's why now is the right time for Synovus to launch something like Maast, is because of all those different forcing functions coming together. And it's one of the top strategic initiatives at Synovus, as you might expect.
Yeah.
And we have some very lofty goals over the next 5 years in terms of what this is going to mean in terms of revenue, deposits, loan balances, et cetera.
Well, I appreciate the prognostication. And I guess as before we adjourn here, Tom, what should we expect from Maast over the next few quarters? It sounds like you're in pilot and you're heading to live soon. What's the debut? When does that happen?
So we're going to go into what we call a controlled launch in the first quarter, which is, we'll be continuing to be very selective in terms of partners that we bring onto the platform, software partners that we bring onto the platform. And our objective would be by the second half of the year is to, truly turn it on. And what I mean by truly turn it on is that a software provider somewhere in the 50 United States will be able to go to maast.com and hit that button that says apply. Right? And that's what we call our generally available release. And our goal is to have that, truly generally available by midpoint of the year, 2023. But obviously we're boarding, our pilot or target, partners all the way through that period. So, and then from there, it's all about scale. It's all about scale. We certainly have high aspirations of how quickly this is going to scale. So we're busily building, the infrastructure underneath it so we can support it.
Well, that's great. And I look forward to hearing more about Maast as we enter 2023. I thank you so much for spending a little time today with me, Tom. You're a busy guy, and this means a lot. So thank you very much.
Thank you. Look forward to talking again.